Nigeria's Federation Account Allocation Committee now heavily depends on revenue from the Federal Inland Revenue Service for its monthly sharing to the 3 tiers of government, because a significant portion of the Nigerian National Petroleum Companies Limited's monthly revenue is now directed to the payment of fuel subsidies. 2021 financial records of the FIRS contributions to the FAAC allocations revealed that the Federal Revenue Collecting Agency's contribution in the year under review was about a total of almost 60%. It's 5.2 trillion out of 8.9 trillion given to the 3 tiers of government last year. Joining us to discuss further, Abdulazeez Kuranga, who is the macroeconomic strategist at Cordros Securities Limited. Abdulazeez, good afternoon. Thank you so much for joining us.
Good afternoon, Lotus. Thank you for having me.
Yeah, well, let's start with the FIRS, and this looks like an increasing dependency on their contribution. What do you make of it?
Yes, so it's largely expected, given the current issues that are currently plaguing the oil sector, oil production challenges and subsidy payments. And if you want to look at even historical data, it gives us a better perspectives into the issue, because as of 2010, the non-oil revenue contributed 72% to the gross revenue of the Federation, while the oil revenue contributed 22%. But fast forward now to 2021, based on the CBN's data, so the non-oil sector is now contributing 55% to the total revenue, while the oil sector is now contributing 45%, down from 72% in 2010. So, and again, if you also look at the recent FAAC reports, you will notice that majority of the increases that we've been seeing in FAAC has largely been due to VAT increases, company income tax increases, as well as import tax. And for that company income tax, we can see that it is consistent with the Finance Act, where majority of all these non-resident companies, they are now liable to pay taxes, particularly digital services. They are now liable to pay 6% taxes of their total turnover. So all these factors now, they are now showing us that. So it is not, since the FIRS is the one that is even collecting all these VAT, CIT and the like, so it is not surprising to see that the FIRS is now the major contributor to FAAC rather than the NNPC so far. So overall, it is a positive development, given that oil revenue is largely susceptible to fluctuations in the international prices of crude oil, which are beyond the control of policymakers. While the non-oil revenue is stable.
Yeah. What's the impact of shrinking oil income for Nigeria, though?
Okay, so the impacts, we can look at the impacts in 3 legs, and we can also look at them in the short term. So the first impact is in the external balance. So shrinking oil income means that there will be limited inflows into the external reserve. And if that is the case, then definitely the CBN will be having challenges with being the major supplier of FX in the various markets of the economy. And based on that, we'll now be seeing persistent pressure on the currency. And if you look at it truly, in 2021, the average supply, the average FX supply of the CBN to the total market was about $1.82 billion on a monthly basis, and that is significantly low when you compare to about 3.4 billion monthly average pre-pandemic period. So that lays credence to the fact that shrinking oil income will be limiting accretion to the external reserves. Other things being equal, then it will be limiting the CBN's ability to defend the currency. And also, apart from that, you also look at the federal government balances, the fiscal angle of things. So with oil income shrinking, then definitely in the short term, you should be seeing revenue underperforming, largely due to the underperformance of the oil sector, and that is what we've been experiencing recently. And based on that, and the government also spends, and what they spend is usually in line with what they budgeted for. And if you are spending in line with what you budgeted for, but revenue is underperforming, then definitely we should be seeing the fiscal deficit increasing more than expected, and that will be increasing domestic borrowing and external borrowing, and that will not be thereby leading to increase in use in the fixed income market, if we look at that. And also, lastly, in the short term, there is also the indirect impact of shrinking oil income into all other some of the other sectors of the economy, so such as manufacturing, for instance. So if that is the case, then it tends to indirectly reduce the growth prospect of those other sectors, and overall it will be dragging down the overall growth of the economy. So to now not make it to be a long-term impact or a structural issue, then there is a need for you to actually diversify your export base. And again, if you want to also look at revenue base of the government is already trying in terms of non-oil revenue, but then more needs to be done in terms of creating a simple tax structure, as well as trying to increase or widen the tax net.
Thank you for mentioning widening the tax net. The informal economy, Abdulazeez, this quest to formalize it, can they get more taxes from there, or is that a lost cause?
Yes. So majority of empirical evidence on informal sectors are largely, we are largely seeing some of this empirical evidence from academic journals. And based on the recent journals, majority of them, they put the size of the informal sector at between 47% and 67% of the economy. That shows that that sector is very large. And in-house at Cordros, we use the multiple indicators and multiple causes approach, which is the mimic model, to actually look at how much revenue Nigeria can actually generate from the informal sector. And based on the informal sector size of 60% of GDP, we're estimating, based on that mimic model, we're estimating that about 55% of revenue is actually lost due to the not formalizing the informal sector of the economy. So based on that 55%, we're estimating around 4 trillion naira of 2019 is being lost as a result of not formalizing this. So if you can actually formalize this sector and also make that tax system to be simple and to streamline it so that it will be simple for everybody, then the government can potentially generate up to 4 trillion naira annually.
That would be huge. That's almost what did the FIRS put in 2020? Wasn't it 5.2 trillion? That's almost the entire amount. Wow. Okay, let's hop into your report. Look at a chart here. The non-oil sector, we've already talked about this now in terms of what Federation account and everything. How much can be dependent upon with respect to the non-oil growth? Can it really propel the economy forward? Yeah, so there it is. So we're seeing non-oil GDP and then real GDP. So how can we depend on non-oil growth?
Yes,
we can.
Really, yes. We've been seeing it. Yes, we've been seeing at least post-pandemic. We've been seeing it. The non-oil sector remains the engine growth of the economy, and that has largely been driven by telecoms, financial services. You see trade. You also see financial services also. So those sectors, as well as manufacturing and agriculture, they've actually been the ones propelling the growth of the economy, and this is still good for the economy. So over time, if we continue to see improvements in doing businesses and the likes, and also making the policy context to also be simple in nature, not complexing things, then we believe that yes, the non-oil sector will continue to.
You've got a sector, a section of the report that says the oil sector is still in the woods. Can it get out of the woods? Because it seems like it's been in the woods for so long now. Yeah, look at this chart. This is from your report. It's terrible. I mean, the red bar is oil growth. It's fallen to, what is that, 1.2 or 1.4? That's the red bar. Looking at oil growth. Crude oil, the black bar, crude oil production, and then you've got GDP growth in the negative now, 26%, which I think is the highest since it's been. So can we get out of the woods? For now, we are not seeing the oil sector go out of the woods for now, because our prognosis is largely on the factors that are currently affecting production. So you see issues such as divestment of these oil companies in respect to their moving away to cleaner energy. Then we're also seeing massive thefts and vandalism, coordinated attacks on the pipelines, and also some of the complexities relating to COVID, because even as of May, the oil rig count was just 11, and that is still lower than pre-pandemic levels of up to 18 as at then. So based on all those factors, infrastructural decay, so all these things, they are not something that can actually be solved
within a short period of time. They require a deliberate effort and also a long-term effort to actually solve. So, but in the short term, for 2022, we are not seeing the oil sector go out of the woods, at least on an annual basis.
Thanks. All right, let's go. Let's put up another chart where we're looking at some of the sectors you mentioned: trade, real estate. Can we depend on these non-oil sectors? I mean, we trade, ICT, real estate, transportation and storage, financial services. Is this enough? Don't we need more for non-oil growth to propel Africa's largest economy? Don't we need more than what's on this chart from your reports? What do you say?
Yeah, to begin with, then I would like to take us back to Q1 figures and Q4 GDP figures. So when we did attribution analysis on the contributions of these subsectors to the overall growth, we note that this ICT has actually been the largest, because in Q4 it's contributed 0.6% to the 3.98% growth, and in Q1 it contributed 1.7% to 3.11% growth. Then imagine you taking ICT away from it, then you note that growth would decline significantly. So we've actually been seeing all those ICT, then trade also, and manufacturing also contributing. But then we need to also expand all these non-oil sectors. We need to expand them towards, you see the likes of real estate, you see construction, you even see manufacturing, and also see education. So those are also other sectors that can be added to still propel growth forward.
Fantastic. Let's quickly run through these three charts. Inflation, food inflation, core inflation, and then you also charted, look at this. This is scary stuff, year on year. And then you've got year on year on the left, you've got month on month. Look at core inflation climbing. What's the outlook with inflation? What do we do? Can we do anything? Because this is a headwind. This is a headwind to growth. Look at food and transport. And this chart here, two of the largest items, I believe, in the basket, or at least what most Nigerians pay money for.
Yes.
So what do we do? Give us the answers. You're the one giving us all the answers today. So what do we do?
Well, since March or since January, we've seen the headline inflation increasing on a yearly basis and also on a monthly basis. And factors, if you look at factors, you'll be looking at diesel prices, which has increased by more than 100% on a year-on-year basis. You're also looking at gas prices, which has also increased by 89% on a year-on-year basis as of May. Apart from that, you see increased demand, especially from the Easter season. You also look at securities challenges, all these structural challenges that are still there, and the pass-through impact of transport costs and currency pressure. So those are contributing significantly to the headline inflation, to the increase in the headline inflation that we are seeing. And going forward, with the Russia-Ukraine conflicts not going down soon, then definitely we are seeing all these energy prices continue to increase going forward. And recently we've seen the shortages of PMS recently, and some fuel stations are selling at 180. So all those, they contribute, and that means going forward into the rest of the year, we are still seeing the headline inflation continue to increase. However, we should be seeing some moderate pace of growth, or we are seeing it to moderate a bit towards Q3, largely driven by the favorable base from the prior year. So overall, our expectation at Cordros is that the headline inflation will average 17.4% on a base case scenario. And that is even higher than the 16.98% that was recorded in 2021.
Well, brace up, Nigeria. Brace up and, stay strong. Abdulazeez Kuranga, macroeconomist, strategist, Cordros, Securities Limited. We thank you so much for joining us. So much to discuss. We have to get you back here again and keep getting these outlooks on our dear economy.